Hi, this is Joseph. It is Friday. It's October 29th. This is another day of more breakout strategies and also the HL30. So I'll cover quickly what we did today. So we had three total. Didn't take any trades here on the dollar yen today, but we had trades on the euro dollar, which is what you're looking at now, the pound dollar and the dollar Swiss. I'll show you those in just a moment. So this paid 60 pips. So what I'm going to do is detach this and roll it right back over. This is the HL30 strategy. Now, if you want to learn more about it, the link is in the description. It'll send you straight to my website. When you get to my website, it'll look like this. All you got to do is enter in your name and email address, and you can actually watch a video that will explain how this HL30 works. We picked up 250 pips in one day just using the HL30. So let me show you again what happened today. This is an HL30 on the euro dollar. Now, what I'm doing with this particular strategy is basically trading off of the previous day's high and low. And when I get a specific signal pattern or candle, that is precisely my entry. And I use a 20 pip stop and a 20 pip target. Now, very often price will hit the first target and then it'll continue to trend for the rest of the day. It doesn't do it every day, but when it does that, you want to maximize the opportunity. And the way we actually do it, and the way I do it, the way I teach my coaching clients, is that I get into the trade and I execute two open orders. So for example, with this one here on the euro dollar, this is 1.1678. I use a 20 pip stop, so my stop is going to be at 98, which is right up here. You can see it there. Never really came into question, so we didn't have to worry about it. And this is typical with most of the HL30s. The first target is 20 pips away from the entry, so I would close the first order. Remember, I'm going to place two orders at the same time when I get into this trade at 1.1678. I'm going to immediately set the first order at the first target of 1.1658, and then the stop at 98. And then the second order, I'm going to set that with a target of 1.1638, which is 20 pips further from the first target. Now, generally, that's what we want to do because I've got many case studies. If you watch that case study, and I'll explain exactly why, on certain days like this, you can see that it just continued to trend a lot further. And if you're there, your hands on just before it hits that final target, you can trail this a lot lower, especially if you can see why. Sometimes this could be due to economic data, something to that effect. It doesn't happen all the time. There are other times when it'll stop just a little bit lower than that second target, and then that's it. It'll bounce, and you've got to lock in your profits. So one of the things I always tell all of my coaching clients when they're going to use this strategy is make sure you lock in profits. There are going to be days where it exceeds the targets, but there are going to be days where it just goes to the first target and stops, or it goes to the second target and stops and doesn't go any further. And you don't want to test that. You don't want to find out and give back profits. That's going to turn into a losing trade when, if in fact you would have just followed the plan, you would have made profits. So let me review exactly what the profit potential on a trade like this is. This trade actually paid $600. I trade standard lots. A lot of my coaching clients trade standard lots. Some of them just trade mini lots, which is okay. That's $60. That's not a bad trade, not a bad profit on one single trade. So the way it works is, again, we open up two orders. The first trade closes out with a total of 20 pips. The second trade closes out with a total of 40 pips. So effectively, between the two open orders, you're going to earn 60 pips on a trade like this using a 20 pip stop loss. So you can see here, again, it works pretty smoothly. I mean, this is very common. It doesn't happen like this in every HL30 situation. Sometimes we get a little retest, and sometimes it'll go back up and test the previous day's high, and then it'll come back down and resume. Every day is going to be a little bit different, but it's the structure. You need to know how to confirm this. You need to know how to find it. And what we're looking for as far as the previous day's high and low, it's not just a matter of just waiting for it to tag that previous day's high and low, because you can see here with this candle, let me go to this candle right here. This candle right here went as high as, sorry about that, trying to get that number in there. My mouse is moving around, 89, but the actual high was 91. So you want to be very specific about your entry, and it's going to happen like this every single time. I've got a checklist that I give to all of my coaching clients. And it's just step one, make sure that you got confirmation, you know where the previous day's high and low is. And we know that when the rollover period develops. So here's a dotted line that separates the yesterday and the start of the new day. So we know where the previous day's high and low is. And then we need to be using certain indicators to confirm that we're actually getting a reversal pattern that's going to work. Now, obviously, there's going to be some HL30s that will fail. But there are ways that you can look at the daily time frame at the end of the day with the closing prices, and you can determine whether or not tomorrow would be a good day to use an HL30. So I teach my coaching clients how to do this. I do this. So very often when you see an HL30 that doesn't work, we're not taking those trades anyway, because we understand and we are able to identify the conditions and the specific environment that would create a higher risk trade opportunity. And that's what every trader should be able to do with any trading system, not just the HL30, but with any trading system. You should be able to use it and know it and be able to apply it so well that you know when the optimum conditions are to use and execute that trade, and then you know when that trade, that technique won't work in certain other conditions, and you stay away from using it. You use other strategies to earn profits and to take trades and trade the price action. So this trade, again, paid 60 pips total for a total of $600 with standard lots. And then the next trade here was the dollar Swiss. Now the dollar Swiss did pretty much the same thing, just in the opposite direction. Now the dollar Swiss, I'm going to go ahead and detach this and I'll explain a little bit more about what could happen with some of these HL30s. So you can see here with the HL30 here, yesterday's low was right here at the 0.9114 area. And you can see that it dipped down a little bit lower and exceeded the support level. So some people might look at it and go, okay, well, it was in a downtrend prior to forming that low. Maybe it's just going to continue a lot lower. And this is a trap, right? It's that head fake that a lot of people get stuck in, and it reverses and goes back to the opposite direction. You get stopped out. So the HL30 will help you avoid these reversals or these head fakes like that so that you don't lose money. You're only waiting for one simple setup, and here is the HL30 right here. So the HL30, it's still qualified as an HL30 because it remained within these certain boundaries of the previous day's high and low. We then wait for the close completed candle pattern, which was here with a close of 0.9116. Again, 2 open orders. When I get into this trade, I know where my stop loss is at this point. If I get in at 91.16, my first target is going to be 36, and my second target is going to be 56, with a stop here at 90.96. So I know where my stop is. I know where my profit targets are. So you can also calculate your risk to reward. This is incredibly important if you want to be able to manage and control and also to just to protect your capital at the same time. The reason I say that is that a lot of times there's traders that say, I don't want to take any trade that's like, less than a 2-for-1 reward to risk. Other traders are okay with a 1-to-1. Sometimes that's really all you're going to get in certain instances. So it's really important that you have the ability to be able to calculate that before you get into the trade and you accept that risk. So we always know where our stop loss is, we always know where our targets are, and we just rinse and repeat this trade opportunity every single day. Once we're done with these trades, we wait for the rollover, and then we reset and try to do it again the following day. If the conditions aren't right at the end of the day, and we know that tomorrow is not a good idea to be taking any HL30s, then we won't. Those are higher risk and they're likely to fail. So let's go ahead and play this one out. This one hits the first target. This one hits the second target. Another 60 pips, another $600. So at this point, between the euro dollar and the dollar Swiss, I'm up $1,200 using standard lots. Or you're up $120 if you're using mini lots. This was another trade. Let me go ahead and put that right back where it belongs. And let's go to the pound dollar. So the pound dollar was a little bit different. Now the pound dollar gave us a good morning London trade. I call it a good morning London trade. Now this is a very specific technique. Again, if you want to learn how to use these strategies, go to my website. This is the homepage of the website. This is Forex Day Trading Academy. What you're going to do is see the link just below this video. Go to this homepage, enter in your email and your name, and immediately on the next page, you're going to be able to watch the HL30 and the case study where we earn 240 pips. You'll be able to see in more detail what the HL30 does. And then I'm also going to send you some videos that will explain this Good Morning London strategy. The Good Morning London strategy works almost all of the time. So what I mean by that is that it doesn't set up every single day. But if you can trade the London morning, when the London market starts, if you can trade it early in the morning. So for some people here, I'm in California, so that would be really, really early, and I wouldn't be able to wake up at all times at midnight, right? Sometimes people can't do that. They work full-time jobs. Or if you're on the East Coast, let's say in the New York area or Florida, that would be 3 o'clock in the morning. Again, for many people, that's just not possible. But if you can trade the London morning, the first 30-minute bar at the London Open, this is a really good opportunity. Now this works, again, if you're trading around the clock or if you live outside of the United States, or let's just say that you can wake up and you're willing to do that. You can set it and forget it. And what I mean by that is once you get the signal and you have it confirmed, you can then just set in the take profit target and your stop loss and then go to sleep if that's what you want to do. The HL30 actually works better for set it and forget it than the Good Morning London strategy. I explain exactly how to do that in my coaching course. I break down all of these trades and I show you how to find the better trading opportunities and then the higher risky trades that you would avoid. It's very important that you understand the conditions for both being able to use it effectively so that you can earn profits, and then also know when it's not likely to work so that you can avoid those risky trades and you're not experiencing a high level of failed trades. Again, this one is another strategy where we're using a 20 pip target, and if it hits the first 20 pip target, we would then trade it to an additional 20 pips further from the first target. So again, placing two orders on the entry, I would close the first target here at the first one at the first target. There's 20 pips, and then the second lot at the final target for 40 pips. Again, effectively earning 60 pips. So with these 3 trades alone, I earned 180 pips, or $1,800 with a standard lot, or $180 if you're using a mini lot. So it's very effective. It works almost every single day. Now, again, I mentioned you're going to occasionally experience losses if you don't understand the basic idea of being able to detect the conditions that are optimum for the HL30 or the Good Morning London strategy, and then also be able to understand when you can see that the markets aren't lining up right, the structure isn't right, so it's not going to work the following day and you just avoid it altogether. There are other opportunities that I teach, other strategies. I have a Tech 1 trade, breakout trade. I also teach a IMP crown pattern. All of these are great opportunities for you to get more money out of some of these trades if they do not line up as a Good Morning London strategy or an HL30. But these are highly effective. These are just 3 trades. Most of my coaching clients, they'll either use the HL30 exclusively and they make a full-time living from the HL30, or they use in combination the HL30 and the Good Morning London strategy. Sometimes we can have an HL30 on the pound dollar and a Good Morning London strategy all in the same day, and they'll both hit their 60 pip targets. So in one day, you could effectively, with the pound dollar, earn 120 pips, and then of course you would earn the 60 pips here on the dollar Swiss, and then 60 pips here with the euro dollar trade on the HL30s. It's that effective, and you can really make hundreds of pips per day when the market's giving you the opportunity by using one simple strategy just like this. It's not complicated. I promise and guarantee that all of my coaching clients, they can learn how to use and execute this HL30 in 15 minutes or less. And if they can't use it in 15 minutes or less, I give them 1 full hour of coaching, private coaching, where we screen share, and I make sure that by the end of that 1 hour, they're able to use the HL30. It is not complicated. It is so easy to use. It's one of the easiest. My clients say all the time, it's one of the easiest strategies they've ever used. If you want to learn more, again, go back to my website here. The link is in the description. Go to forexdaytradingacademy.com, enter in your name and your email address. You'll watch, again, immediately after clicking this blue button, this case study. You'll see the video on how to make 240 pips, using the HL30 strategy that I just showed you. And then I'll send you additional videos that will teach you how to use that London breakout strategy. Thanks for watching.